Guys, this is S&P 500 weekly technical analysis for the week of November 4th. Means from November 4th, which is Monday, to November 8th, that will be Friday. Now, if you look into the picture, then there is clearly a bearish breakout. Bearish breakout means that technically the market, the S&P 500, Dow Jones and the entire market should go down, and there must come around 3% to 5% fall in the market because of this bearish breakout condition. And this is exactly what I mentioned in my midweek update published on Wednesday on October 30th, that if there comes two closings below the trend line or below this zone, then it will be considered as bearish breakout, means more fall will be there. So overall, this bearish breakout condition is seen in the entire market. However, this more fall may not be seen in the market as such. Why? So this is a big question, that even if there is a bearish breakout, then why we are not expecting 100% confirmation on this the fall? The reason is the heavy volatility in the market. Whatever you have seen on Thursday around 1.85%. S&P 500 lost 1.85% within a day, and it closed at 5705. So this is an example of the heavy volatility. Now in the next week, Tuesday is the voting day. Then on 7th of November, Thursday, the FOMC meeting and the FOMC decision and the press conference. But now the earning season is over for the S&P 500 and for the Nasdaq, as all of the primes have already posted the earnings. This means that next week will remain heavily volatile, and technically S&P 500 must go down, must come down at least minimum of 3 to 5%. But because of this heavy volatility, the market has the potential to sustain, to survive and to revive. Because on the weekly charts the market is still bullish. This means that the trend is still bullish. There is no change in the trend, absolutely no change in the trend. Whatever is happening, it is happening on the lower level charts, especially on the hourly charts, 4-hourly charts, and now this is seen on the daily charts. So this means that even if there comes a fall, if there comes more fall, then also it will not change the trend. The trend will remain bullish unless some conditions are fulfilled, and for those conditions to be fulfilled, there must come a minimum of 3 or 4 weeks of continuous fall. Means for the entire month there must come a fall, so that the market can change the trend from bullish to bearish. But so far that condition is not there in the picture. This means that the trend will remain bullish. Whatever fall is there or whatever fall will be seen, this fall will be in the bullish trend. So it will be considered as like there is a bullish trend, then there is a break, and then bullish trend, break, bullish trend, break. However, whatever will happen, I will keep you posted through these daily precise updates of the S&P 500. So this was my pre-market update on Friday before the open of the stock market. And here I mentioned that the maximum S&P 500 can try for is the 5750, 5768. This will be the maximum for the S&P 500 considering all of the cases and all of the conditions. And this update was posted before the open of the stock market. And if you notice, on Friday the high was 5772 only. It struggled, failed and came down, but managed to sustain in a special condition. So I will discuss this thing and everything in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also I would like to update you that the LNPL program, Learn Now Pay Later program, will end on November 10th. So after November 10th, no request for the LNPL will be accepted. So if you want to learn these premium hacks with almost 100% certainty, then you can go for this program, and you can opt for learn now, pay later. And this offer is valid until November 10th, Sunday. So I have given the link to all of my programs and my Patreon community in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart means the long term picture for a month, for 2 months or so. On the weekly chart, there is a little change, just a little change, not a heavy change. Okay, and still the market is around 90% bullish on the weekly chart. That is why I mentioned that there is no change in the trend. Trend is still bullish. This break is in the bullish trend. And if you are trading in the stock market, or if you have some knowledge of the stock market, then the bullish trend is like up, hold, down, up, hold, down, up, hold, down, like this. And the bearish trend is down, hold, retrace, down, hold, retrace, down, hold, retrace. Okay. So here you can clearly see, okay, this kind of movement is there. So I will discuss the conditions, okay, which will force the S&P 500 and the market to change the trend. Okay, and technically there is the change in the stochastic RSI. Okay, so that I will also discuss. Point number 2 is the S&P 500 technical analysis on the daily chart. On the daily chart, clearly the market is neutral, 50-50. Okay, other than that, the most important part is the bearish breakout condition. This bearish breakout is very, very important, because if, like, from elections, means from political, okay, geopolitical this environment, or from Feds, or from anywhere, if there comes even a little failure or little bad news or anything, then it will force the market to go for a heavy fall in this, the bearish breakout, because it is already in the bearish breakout condition. Okay, so I'll discuss this thing in detail here on the daily chart. The third and the last point of the agenda is the probable movement of the SP500 from November 4th, which is Monday, to November 8th, that will be Friday. So what is expected to happen? What will be the conditions for the bullish movement? What will be the conditions for the bearish movement? I will discuss each and everything in detail in this, here in this, the last point of the agenda. And once again guys, all of these 3 sections are interrelated, are interconnected. So when I say the probable movement, so by the time I discuss the probable movement, I have already covered 30% to 40% probable movement in the first and the second point of the agenda, because I discussed the candles and the patterns. So these are very, very important. Okay, so that is why it is recommended that you should watch all of these, the 3 sections, in order to understand what is going to happen in the S&P 500 in the coming week or weeks. Now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. So here I will do the technical analysis of the S&P 500 on the weekly chart. So weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now, this is the last candle in the S&P 500. It's a heavy bearish candle. Closing of the candle is below the closing of the previous candle. Okay, and other than that, closing of the candle is below the moving average. So if you notice 1, 2, 3, 4, 5, 6, 7, and this is the 8th candle. Okay, and before that the 7 candles closed above the moving average. This is the only candle, last candle, which closed below the moving average. So clearly there is bearishness, clearly, otherwise it would have closed above the moving average. So there is bearishness and also weakness, bearishness and weakness. Okay, however this does not confirm any gap down open on Monday. Okay, it simply indicates that irrespective of any open on Monday, there will be an intraday bearish movement no matter what. Very, very simple. Okay, and when I analyze the last candle of the Dow Jones, this is the Dow Jones. Last candle of the Dow Jones, then it's a normal bearish candle, and the closing of these last 2 candles is below the moving average. However, it managed to sustain above this, the red moving average. Okay, It again, so once again, it does not confirm any gap down open. No confirmation on the gap down open. It does confirms the continuation of the weakness in the market or the bearishness in the market, because when I say the bearish breakout condition on the daily chart, it is also in the it is also seen in the Dow Jones. Okay, so when I will analyze the daily chart, then I will show you, okay, this is the bearish breakout condition. So now it's clear that bearishness and weakness is there, and it says that intraday bearish movement. Okay, and because this is a weekly candle, this means that intra-week bearish movement is 100% confirmed. This means that even if the market try to move up, gives one green candle, two green candle, then also it will be forced, it will be compelled to give red candles, one or two back-to-back red candles or good red candles. Okay, so this is through the candle, the bearishness is there and it will continue. However, it does not confirm any gap down open. Okay, now let's talk about the technicals. Now in terms of the technicals, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to learn the premium hacks, premium and the hidden hacks, which works almost 100% of the times and give best results, because we are able to predict the green candle, red candle, gap down, gap up, and many other things through these the hacks. So instant movement we can get through these the hacks. And also I am offering LNPL to this the program. So I have given the link in the description of the video and also in the comment section. Now in terms of the technicals, S&P 500 is bullish through the Bollinger Bands on the weekly chart. S&P 500 will be considered, still it will be considered as bullish through the moving averages, clear fan out in the moving averages. Okay, on the weekly chart, S&P 500 is also bullish through the Ichimoku cloud on the weekly chart. Now some other technical indicators. Stochastic RSI just bearish on the weekly chart, and also there is no overbought or no saturation on the weekly chart. Okay, now comes the most important thing, the most important part. This is the MACD. MACD is moving average convergence divergence. S&P 500 is at the junction wherein if there comes any red candle, I am talking about the weekly candle, or a thin or a normal bullish candle or a thin bullish candle, 100% there will come up bearish crossover in the MACD. And because MACD is known for its linear movement, very plain, very simple movement, okay, no frequent changes, this means that once there comes this change, bearish crossover in the MACD, then we cannot expect this change to revert, okay, in next 2 to 3 weeks minimum. So if by the mid of November, if everything goes well and the market, okay, whosoever wins the elections, if the market decides to move up, then also it will take 2 to 3 weeks for the market to force the MACD to change from bearish to bullish. Okay, now if you have subscribed to my YouTube channel for last many months or years, repeatedly I have mentioned this thing again and again. Okay, and what is that? When the MACD and the stochastic RSI are seen in the same direction, then that direction becomes the direction of the stock, direction of the index, or direction of the market. If there comes a bearish crossover in the MACD, stochastic RSI is already bearish, then no matter what, FOMC, elections, results, no matter what, market will come under pressure, because the bearish side momentum will grow and this will restrict the bullish side movement, and even a small event or anything, okay, can force the market to give heavy red candles back to back. Okay, and the market is also in the bearish breakout condition. So when the bearish breakout condition meets this kind of conditions, okay, the bearish MACD, bearish stochastic RSI, then we can expect some heavy fall, okay, or back to back red candles. But because of the geopolitical event, the elections, the results, okay, and the FOMC is there, so the heavy volatility will be there, and if anything that can help the market to survive, to sustain, to hold, it will be the volatility only and only the volatility, because at this point of time the speculation will be very high, very heavy. This heavy or high speculation can help the market to not to give up heavily. Okay, so overall what we have seen here is that so far, okay, S&P 500 will be considered as 80% bullish on the weekly chart. This means the trend is bullish. Now in terms of the Dow Jones, almost the same picture, the same situation. Okay, moving only the moving averages, because the closing and also the open was around the moving averages. Okay, otherwise everything looks good. But the MACD of the Dow Jones is not in that condition, or is not as bad as the MACD of the S&P 500 is, because the MACD of the S&P 500 is at the junction wherein any kind of red candle, small, thin, heavy, doesn't matter, okay, or any kind of small green candle will force the MACD to give a bearish crossover. However, this condition is not in the Dow Jones. Only and only if there comes a heavy red candle next week, then only there will be a crossover kind of condition, okay, otherwise not. But as of now MACD is bullish. So overall, considering everything, Dow Jones is also 80% bullish on the weekly chart, means the trend is bullish. Okay, so when I say that trend is bullish, what does this actually means, okay, or how it will help the market? See, when I say that trend is bullish, it means that as of now the market looks like the market is coming down. Okay, see, earlier also it was moving up, then there was some decline on the daily chart. Okay, there was some heavy decline, and there was the crossover in the moving averages. It revived, moved up again, the same picture, then bullish slip was there, sustained, and then there's the bullish. So bullish trend means that even if there comes fall, but as long as it is bullish, it will help the market to revive. The market will be in a condition to recover irrespective of anything, as simple as that. Market will be in a condition to realign with the trend. Okay, market will always be in that condition. But once the trend is changed to bearish, in that case any bullish side movement will be seen as an opportunity to short, because doesn't matter whether it moves to here, okay, or at this point, or at this point, because eventually it will have to come down, because the trend is bearish. Similarly, that trend is bullish. Okay, again, even if it is coming down, then also it is in a condition to revive, to retrace. So if it's coming to your mind, then should we consider this as an opportunity to buy? Yes, you can consider this as an opportunity to buy, because the trend is bullish. But when you go for, okay, this thing, when you buy at this point, remember the market is at around all-time high levels. Okay, and at the same time now the geopolitical situation is there. Okay, mid of November results will be there, elections, and the FOMC, and the slowness in the economy, and inflation is sustaining. Considering all of the factors, if you want to buy thinking that it can be or it may be a low, yes, you can buy, but it is highly recommended that you should use a tight stop loss. use a stop loss at this point of time, okay, because the market is heavily volatile. You will see heavy up down fluctuations in the market. One day it is giving a gap up open, next day it is giving a gap down open. Intraday there was sudden bullish movement, intraday there was sudden bearish movement, this kind of movement. So in order to curb the fluctuations, use a tight stop loss if you are buying at this point of time. Now guys, before I discuss the daily chart, so let me share this information with you, that these are the products or the programs that I offer. Okay, this is 8 stock market hacks plus modified technical indicators. I use the modified technical indicators. Okay, this is why if you are wondering that why my MACD, okay, or why my moving averages are showing different values, then because these are modified, and I have modified my technical indicators in order to get an early prediction even before the things happen. Okay, so here these are 8 stock market hacks with modified technical indicators, and the hacks are with 95% accuracy, although the accuracy is almost 100%. Okay, however, I'm keeping only 5% margin of error. So these hacks works almost 100% of the times. Through these hacks you can predict whether there will be a gap up open tomorrow, whether there will be a gap down open tomorrow, whether there will be a green candle tomorrow, whether there will be a red candle tomorrow, and whether there will be a 2% or 3% heavy bullish movement, or 2% or 3% heavy bearish movement, and trend change, and a lot of things. And also these hacks gives instant results, instant. Okay, and these are proven hacks, and also these are premium hacks and hidden hacks you might not have heard or seen. These are the hacks. This is options trading, premium calculator, options trading strategies, and everything related to the options. And this is the mix, this is the club of this and this. Okay, the combination of this program and this program. And also I'm offering learn now, pay later, okay, and 4 months of time. So you can learn now and you can complete your payment in 4 months. Okay, and guys, this LNPL is applicable until November 10th, Sunday only. After November 10th, I will not accept any request for the LNPL. So guys, I've given the link in the description of the video and also in the comment section to my Patreon channel, to my Patreon community. And when you visit my Patreon channel or my Patreon community, then you will see the shop option, SHOP, shop option, and there you will see all of these the products. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Now, if you look into this, the last candle, it's a bearish hammer. It looks like a bullish candle, but in actual it's a bearish hammer. Okay, and it is indicating bearish movement, weakness. However, the candle for the entire day was in open equal to low condition. So without this open equal to low condition, we would have anticipated a gap down open on Monday. Okay, but because the open equal to low condition is or it was there along with all of these the bearish conditions, this means that a gap down open is not confirmed, not guaranteed, may or may not happen. Okay, also irrespective of any movement on Monday, we can expect an intraday bullish movement. This bullish movement may be seen either after open, immediately after open, that S&P 500 try to move up and then gives up, or intraday if it is like there comes a gap down open, it comes down. Okay, then intraday it will retrace, it will give a good retrace. Okay, that kind of bullish movement. Okay, through this the last candle. And if you notice in my midday update on October 31st on Thursday, I mentioned that although there is this the high volatility, okay, but as long as it is trading in this the open equal to high condition and it never breaches its open price, there will not be any bullish movement, any reversal, nothing. There won't be anything. Okay, and yes, there will be this the support level, and this support level will help the S&P 500 to sustain and to hold. And this support level S&P 500 sustained for more than 4 or more than 5 hours at this the support level. And now this is the Dow Jones. Last candle of the Dow Jones. It is a bullish candle and also in the open equal to low condition, and there is no bullish hammer. This candle is more strong as compared to the candle of the S&P 500. Okay. Yes, the bearish breakout condition is definitely there. Okay. However, here I'm talking about the candle only. So now this candle does not confirm any gap down open, and also this candle strongly confirms an intraday bullish movement. Now we have seen that both of the candles, the S&P 500 and the Dow Jones, intraday supports intraday bullish movement. This means that irrespective of any open on Monday, we are anticipating an intraday bullish movement. As simple as that. Okay, this was number one thing. Number two, this is related to the bearish breakout. Bearish breakout in the S&P 500. Again the same thing. This trend line, the failure at the trend line. And remember, again and again I mentioned this thing, and this was the midweek update on Wednesday, okay, which I've given to my Patreon community members. So I mentioned if there comes two closings below the trend line or two closings below this the zone, in that case definitely there will be a bearish breakout condition, and it was very much clear. And whenever it comes down, then it will be coming down to what? It will be coming down to the Ichimoku cloud. As simple as that. So the bearish breakout condition is seen in the S&P 500 as well as in the Dow Jones and in the entire US stock market. So technically the market should give up 3% to 5%. Okay, without any question, without any doubt, or without any issues. But because the heavy volatility is there in the market, this is the only thing that can help the market to sustain, to survive. Otherwise nothing can or nothing will. Now let's talk about the technical indicators. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And if you want to learn the premium hacks for the instant results where the accuracy is almost 100%, then you can buy these products or the programs. And if you also want to learn the options, then this is there. And once again, the LNPL, Learn Now Pay Later, this offer is applicable until November 10th, Sunday, and thereafter no request for this the LNPL will be accepted. So I've given the link in the description of the video and also in the comment section. And this is the shop option on my Patreon page, my Patreon channel. Now in terms of the technicals, if you notice, through the Bollinger Bands it is bearish, through the Ichimoku cloud it is bullish, through the moving averages it is neutral. The S&P 500 is neither bullish nor bearish through the moving averages. And also now we are seeing the crossover in the moving averages, and from 10th 11th of September, okay, until now we have seen like for almost 1.5 months S&P 500 was trading comfortably bullish. Okay, this is the first time after 1.5 months we are seeing, okay, this the change. So through the moving averages it is neutral, and MACD is clearly bearish, heavily bearish, not clearly but heavily bearish. Stochastic RSI is bearish, and yes, the good thing that stochastic RSI is heading for the saturation at the bearish side, wherein we can expect the K to hit 0. But the problem was the last candle. This was a green candle. This means that even if there comes minimum two back to back heavy red candles, then also it will not hit the saturation. Okay, so stochastic RSI is bearish, no overbought, no oversold, no saturation. Okay, so mostly there are these the bearish conditions. So S&P 500 will be seen as 1 and 2 only. So it is 70% bearish on the daily chart. Now Dow Jones, again the same thing. Okay, Bollinger Bands bearish, moving averages neutral, and see Dow Jones is expected to give, if it remains bearish, then Dow Jones is expected to give a clear fan out just like this one, and a proper, all of the moving averages will be there will be a confirmed bearish side crossover, and moving averages will be aligned in a proper fan out position, means heavily bearish. So Dow Jones looks more bearish as compared to the S&P 500, and it was actually the Dow Jones which has created the problem for the S&P 500 and for the entire US stock market. Otherwise, at this point of time, S&P 500 and the market was supposed to be trading at the new all-time high levels. Anyways, Dow Jones, the MACD of the Dow Jones is bearish, stochastic RSI is also bearish, and again it is creating a problem for the market. Means for the bulls, not for the market, for the bulls it is creating problem for the bulls. Neither overbought nor oversold nor saturated. Okay, so Dow Jones looks more bearish as compared to the S&P 500. So we will say it is like 75% bearish on the daily chart. Okay, so Dow Jones is 75% bearish, S&P 500 is 70% bearish. Again, this is the bullish trend. These are the pullbacks in the bullish trend. Simple. Until and unless S&P 500 comes out and the entire US stock market comes out of this the bullish trend, or the bullish trend changes to the bearish trend, this will be seen as pullbacks only and nothing else. And if you notice, on Wednesday there was a flat open, and immediately upon open the S&P 500 moved up, but it failed and it came down. Why it failed? Because it was supposed to fail. There was no bullish side movement. There was nothing like that. Why there was nothing like that? Why there was no bullish support? So if you notice, in my midday update on October 30th, on Wednesday, the S&P 500 again moved up, and it was supposed to struggle at around this heavy resistance level as it was doing for last many days. So it was like 99% clear that it is going to fail. It will struggle. No, first it will struggle, and then it will fail. So the failure was certain that it will fail. Okay, and it breached the strong support by a few points, just a few points, struggled and failed. So it was no surprise, and then it came down. Okay, other than that, the only condition for more bullish movement was two consecutive hourly closings above this strong resistance level, then only more bullish movement towards the previous all-time high. Otherwise nothing will happen. So on that day we have seen that there was no such condition, no 2 hourly closings, nothing like that. However, in future, whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates which I give to my Patreon community members. And guys, other than these daily S&P 500 updates from Monday through Friday, I also give the stock market opportunities, minimum 5 to 10 opportunities every week in the premium stock, in the top 20-30 companies of the US stock market. And that is not all, because every Wednesday I give the detailed technical analysis in the form of midweek update, and I discuss the conditions for the bullish bearish movement, the levels and the resistance levels, the support levels, everything in detail to my Patreon community members. So everything is available on my Patreon channel. So I've given the link to my Patreon channel in the description of the video and also in the comment section. And when you open that link, then you will see that this is my Patreon channel, this is my Patreon page, this is my Patreon profile, and here you will see this is the all midweek update videos. There are 3 levels, 3 tiers, 1, 2 and 3. This is the all midweek update videos only. So when you subscribe to this, then you will be getting the all midweek update videos which are posted every Wednesday. And these two are same, and the only difference is the geographical location. So this is daily S&P 500 updates. This is for non-US Canada resident. This is for US Canada residents only. So when you subscribe to either of these, then you will be getting all midweek update videos, whatever you will be getting here. So you will get the same thing here. Also daily SP500 analysis, updates, movement, levels, zones, opportunities every day from Monday through Friday, and also the stock market opportunities minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, the stock market opportunities, the midweek update every Wednesday, and they know that what is expected to happen, what is happening and why that is happening, and what will happen next day or the coming day. So guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones, and in a manner of the entire market for the next week, means what is going to happen in the S&P 500 and in the entire US stock market from November 4th, which is Monday, to November 8th, that will be Friday. So the first thing first, Tuesday. Okay, before that, the earning season is now over. Earning season is now over for the S&P 500 and for the Nasdaq. This means that now S&P 500 and Nasdaq, these are the tech indices, they are not going to get any help from the stocks. Okay. Number 2, Tuesday. Tuesday is the voting day. Okay. And the market is expected to remain volatile on Tuesday and also on Wednesday. Okay. Then comes Thursday, November 7th, FOMC decision and the press conference. Decision will be released at 2 p.m. Eastern time, and the press conference will be at 2:30 p.m. Eastern time, US and Canada, on Thursday, on November 7th. Okay. So in a manner, now the market will be heavily volatile except Monday. Okay. So Monday we can expect some normal movement, some regular movement, okay, or a little movement. Okay. Then from Tuesday onwards, the volatility will increase. So when I say that the volatility will increase or there will be very high or heavy volatility, what does that mean? This means sudden up, sudden down, sudden fluctuations in the market. One day gap up, next day gap down, or gap up, and then gap down, or heavy fall, or heavy bullish move. Suddenly, for no known reason. Okay. But yes, in terms of the technicals, the concept of 2 closings will work as as usual. But now we will add just one more day, 3 closings. Okay, until the last week of November, because to curb this the heavy fluctuation or the heavy volatility. So 3 closings. Okay, the concept of 3 closings will be applicable until then, and then the market will settle, and then 2 closings. Okay, as usual. Now, so now what we know is that there is a bearish breakout. Okay, the same condition, bearish breakout. Okay, no doubt about that. Through that trend line, there is a bearish breakout. What happens actually when there comes a breakout is, whenever an index or a stock comes into this the breakout condition, okay, then either after some time or immediately. It will retrace back to test the trend line through means the same trend line through which it has got this the bearish breakout, or means it is also applicable to the bullish breakout also. Okay, it will always test. This means S&P 500 has chances, or it has a chance to test the trend line. This means S&P 500 has a chance to move above 5,800. Why? Because the trend line is at around 5,800 or above 5,800. Okay, but remember what I've said. I mentioned either immediately or after some time. Okay, but it will happen. For example, similar kind of situation. Okay, earlier there was a different trend line. It moved up, bullish breakout was there. It moved up, sustained, came down. After many days, many weeks, it came down. It tested the trend line. There was a trend line at this point. Just above. Okay, it tested the trend line, sustained, and then the continuation of the bullish movement. Okay, so this means that 5,800 is in the picture. Okay, and and it will remain in the picture. Okay, in this manner. Now, if it moves up on Monday and Tuesday, if it tests the trend line, remains below the trend line. Okay, it tests the trend line, remains below means moved up, struggled, failed, closed below the trend line, then confirmed 100%, 200% confirmed bearish breakout, nothing else. It is going to give up. The only thing that can allow it to sustain is the high or the heavy volatility, the heavy speculation because of the geopolitical event, because of the elections. That will be the only thing that can help it to hold, to sustain. The similar thing was seen back in, I think, October or November 2020. Okay, the market was flat. It was like consolidation, or it was trading bearish, and then results. Okay, and then on the same day or the next day of the results, okay, when results were announced, it moved up, and since then like for last 4 years it is trading bullish and bullish, just bullish. It never tested that level again in last 4 years. Okay, so that is why I'm saying that because of the elections and the heavy volatility, or this is the only thing that can help the market to sustain. Otherwise, under normal circumstances, market was 200%, it was confirmed to come down without any doubt, without any issues. Okay, this means that again the same zone. Okay, 5802570, same zone. Okay, if there comes 1 2 3 closings above the zone, perfect, it is now back into the bullish zone, and now the chances are there that it can breach the previous all-time high and it can move up, and then later in the month of December, not in December but in January or February, it can go for the correction. Okay, if it moves up, fails, struggles, fails, and remain below the trend line or remain below this zone, means failure and failure. Okay, see, bull side is very, very clear. This is the zone, after the zone the all-time high, simple. Okay, in between these two there is one strong resistance level, and S&P 500 failed at that level for many days. Okay, but as of now this is in the bull side. The bearish side is the bearish side is also very simple. What is going to help the bearish side? The Ichimoku cloud itself, it will help the bearish side to sustain, and the Ichimoku cloud comes or is seen in the 5,600, around 5,600. So if you remember, earlier I have disclosed this 564431. Okay, so any fall for now, any good fall for now will be handled by this zone. Okay, this zone will then decide whether the S&P 500 is going to give up more and more or not, as simple as that. Okay, or it will get a reversal depending on the situation, depending on the conditions. So now we can say that in a manner Monday will be decisive. Okay, now how and why the Monday will be decisive? If you notice, there are already two closings, okay, below the trend line. And in case of the Dow Jones is very near to the trend line. If any index which can recover the trend line, then that is the Dow Jones, not the S&P 500. S&P 500 might still remain, because if we notice or if we calculate, then around 1.7% bullish movement it needs in order to hit that trend line. Means 2% intraday bullish movement must come so that it can sustain properly above the trend line. Whereas in case of the Dow Jones, it is hardly 0 point something, 0.3, 0.4%. Okay, so Dow Jones is in a condition wherein it can sustain, it can give a closing above the trend line. But at the same time, if you notice, moving averages are about to give a bearish crossover. This means that if the Dow Jones managed to give a bullish candle on Monday, this bearish crossover might not happen in the Dow Jones. Okay, there comes this one closing above the trend line, then it can contain the bearish breakout. Okay, but bearish breakout will always remain in the picture as long as S&P 500 and the Nasdaq are there in this manner. Dow Jones can give an interim support, interim relief otherwise. Okay, because of that it will remain in the condition. However, here the most important part, the most important thing is the slip in the Dow Jones. It was slip in the Dow Jones on the weekly chart which helped the Dow Jones and the entire US stock market to remain in the bullish trend and to never enter into the bearish trend. But here we are talking about the daily chart. Okay, if the same slip forms, means if surprisingly if there comes a bullish candle, why and how there will be a bullish candle? Because of heavy volatility. Very simple. Okay, because of this, the heavy volatilities, some means we can expect some something unexpected in the market, some unexpected movement. Okay, flow of the market, something unexpected, sharp up down, gap up, gap downs. Okay, means we are let's say that there is a condition and we are expecting that, okay, conditions are, everything is good, and now there must come a gap down open. Surprisingly, there may come a gap up open. Why? Because of heavy volatility. Okay, but irrespective of these things, after 1 or 2 hours the market will stabilize and then it will follow the technicals. Okay, so if a gap down was predicted but there was a gap up open, then after 1 or 2 hours when it stabilizes, that intraday it will retrace. Intraday there will be a pullback. Okay, anyways, now the most important part is the slip, because if there comes a good or heavy bullish candle, especially on Monday, I'm talking about Monday. Okay, it must happen on Monday, otherwise there will be a, it will be late and there will be a crossover. So if there comes a bullish slip, if there forms a bullish slip, then what will happen? A heavy bullish, heavy green candles in the market, heavy bullish reversal. Why? Because of the bullish slip. Bullish slip is technical. Okay, it gives it allows the continuation of the bullish movement and heavy bullish candles back to back. That will be the condition through which the S&P 500 will be able to move up and to test the trend line. And if everything goes well, then the S&P 500 will also be able to close above the trend line. When that happens, then the bearish breakout condition will be out of the picture. But again, heavy volatility, if it is helping the market to sustain, this can also break the market. Within a day we can see 4% fall, 5% fall. Okay, so heavy volatility will work for both bulls and bears. Okay, but generally in these cases, when the FOMC is there, election is there, the volatility is generally, it works in favor of the bulls. Okay, not the bears. Okay, however, again, any small event or anything small can trigger heavy fall. Remember that thing. Okay, remember that part. So bearish. Now again through the Dow Jones, if there comes a closing below the trend line in the Dow Jones on Monday, then what will happen? This means that most likely or highly likely there was a bearish crossover in the moving averages. Means the market has turned bearish, okay, in the short term. And also there are 3 closings below the trend line. This also means bearish. This means that now in order to get more bullish movement, some miracle or something like that, okay, will be needed. Otherwise it will continue its bearish movement irrespective of anything. S&P 500 will be moving to or will be heading to 564431. Before that there is one more very heavy support, okay, before that S&P 500 has to clear, okay, one more good support here, and then this will be there. But remember, the correction we are talking about, or everyone was talking about, the correction in the market and in the economy, and it is not just for the US economy or US stock market, but it is for the worldwide economy, worldwide stock markets, Europe, US, Asia, Oceania. So everywhere this correction will be seen and felt. Okay, in some countries the correction will be there for 4 to 6 months. Some countries may enter into the recession for up to 1 year, but this will be there. Now this correction, okay, it cannot be confirmed until the results are out, the elections. I'm talking about the elections. Okay, once the results are out and once we know that which party has won the elections, okay, then we can predict, okay, particular date or month for the correction. Okay, but until that, before the results are published, before we know that who has won the elections, if there comes bearish movement, then it will be seen just a normal correction. It will be seen just a normal fall, normal bearish movement in the long-term bullish movement, in the long-term bullish trend. It will not be seen as a correction. No, it will not be seen as a correction. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday, and also the stock market opportunities, and also the midweek update video technical analysis every Wednesday. All of these to my Patreon community members. So if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. And guys, if you want to participate in these programs, or if you want to learn the premium hacks with 100%, almost 100% accuracy, the instant results, okay, then you can participate in these programs. Or if you want to learn the options calculator, premium calculator, trading strategies, then you can participate here. And this program is the combination of this and this. Both of these are programs. And also LNPL, learn now, pay later in 4 months. Okay, this is applicable to this program, and it is applicable, this offer is applicable until November 10th only. So again, I've given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have liked this video, then hit like. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of November 4th. Means from November 4th, which is Monday, to November 8th, that will be Friday.